Let's get straight to one of our favorites when it comes to this topic. Peter Schiff is joining us. He's the CEO of Euro Pacific Capital. Peter, tell me, in your view, what's happening? What's hitting gold so hard today?
Well, apparently people still think the Federal Reserve is serious about raising interest rates, because you had Jeffrey Lacker, coming out this morning and talking about how the Fed needs to be preemptive when it comes to inflation fighting and not really wait for it to heat up, but move sooner rather than later, which is really absurd, because if the Fed really was going to be preemptive, they would have raised rates years ago, and they would already be much higher than they are now. But again, I think this is all talk. The Fed realizes that the U.S. cannot afford for the Fed to fight inflation, that this is all just talk, but apparently the markets haven't figured that out yet, and then gold's down $40 because
Peter,
people actually think the Fed's about to raise rates.
But potentially the Fed is getting more serious. We did see a rate hike last December. We didn't get one in September, but much of the street is betting on another one in December this year. So potentially it may be later than some expected, but maybe this is the time to get the ball rolling.
Well, look, the time to roll the ball was years ago. The fact that we got one rate hike in December shows that the Fed is not serious about hiking rates. All they do is talk about it. Meanwhile, they keep saying they're data dependent. The data that they claim to depend on has actually gotten a lot worse since they didn't raise rates in September. Look at the Atlanta Fed just yesterday downwardly revised their Q3 GDP estimates to 2.2. They were at 3.8 a month ago, and I think they're still too high. You had the IMF come out today and downwardly revise their growth estimates as well. So the data has been weak. We're going to get a non-farm payroll report on Friday. What if that's weak? I mean, when are the markets going to figure out that this is all bark and no bite when it comes to rate hikes?
It may partially be that's impacting gold today, but also certainly currencies are having an impact today as well. There's a lot of concern about Deutsche Bank, the banking system in general right now, and also with Brexit and what we're seeing in the pound as measured against the dollar. So we've got a strong dollar today, Peter, potentially impacting this trade too. And as one of the traders mentioned on the air, when you break through certain technical levels, 1,300, then the sellers pile on. How much of this is sort of a one-day move with respect to those points that I made?
Well, I certainly think that there's probably some stops. This is the first time we've been below 1,300 in a few months. So I think now there are some people who maybe until a few days ago were pretty confident the Fed wasn't going to go, now actually think they might. But again, even if the Fed does raise rates, and I doubt that they would do it in November, that's a week before the election, and I don't think they want to take a chance on an adverse reaction. I mean, as much as they want to deny that they're political, they are very much political, and they certainly want Hillary Clinton to win. So if you think they're going to raise rates, maybe they do it in December, but there's a lot of time between now and then, a lot of data, and it's certainly, if the Fed was going to do it, they can change their mind. But, the financials, I don't think the financials are concerned enough. Most of the bank stocks are up today because they actually believe, or traders believe, that higher interest rates are going to be good for the banks. They're not. They're going to be a disaster for the banks. That's one of the reasons we're probably not going to get the rate hikes, because I think the Fed understands this. But people who are betting that higher interest rates are going to help the banks are wrong twice, because they're not going to help the banks, and the Fed is probably not going to raise rates anyway.
Peter, you mentioned the election. Would you be a buyer of gold ahead of the election in case there is uncertainty or a surprise win?
Well, I've been a buyer of gold for a while, and it's not because of uncertainty. It's because of the things that I'm certain of that I've been buying gold. I mean, I'm certain that all this talk about a recovery is wrong. The recovery is an illusion. It's just another gigantic bubble. That's one thing that Donald Trump has got right. This is a big bubble, and the Fed is scared of letting it pop, and so they're doing everything they can to keep blowing air into it. That's one of the reasons they're not going to raise rates. But again, they can't admit that, so they keep talking as if they're going to raise, but they don't do it. And the markets still take all this rate talk seriously. But I do believe that once the election is over, and this is kind of where I disagree with Trump, I think once the election is over, the Fed can drop the pretense that all is well. They can actually start acknowledging all the weak economic data and not only stop talking about raising rates, but actually do what they really want to do, is cut them. They actually want to go negative. They want to take rates below zero, and they're ready to do QE4.
You made a comment earlier that you think the Fed wants Hillary to win. Do you think that's having an impact on the market?
Well, I don't think it's having an impact on the market. I think it certainly is impacting the Fed. But, I don't think the Fed's going to raise rates regardless of who they want in the White House. I mean, interest rates should be higher. They should have raised them a long time ago. What people still haven't figured out is that low interest rates actually stifle legitimate economic growth. To really grow the economy, we need more savings so we can have more capital investment and higher productivity. And to do that, we need higher interest rates. But we can't get higher interest rates without pricking the bubble. You know, everybody wants to go to heaven, but nobody wants to die. And that is the problem. We're never going to have a real recovery until we kill this phony recovery. But for political reasons, that's not going to happen.
Jim Uriel, question for Peter.
Peter, when you look at the macroeconomic condition from a holistic standpoint, and I've heard you be critical of the Fed, and I agree with you on that, too. Do you think there's also an element that the Fed believes that the policies are overregulate, overtax, don't allow business to bring money here, just keep everything stifled, that they feel they have to counterbalance? I guess what I'm trying to say is there enough blame to go around, or should the Fed have all of it?
Well, the problem is that's not a counterbalance. It's not like two wrongs make a right. Just because Congress it has too many regulations and taxes are too high doesn't mean we should throw more gasoline on the fire by adding cheap money into the mix. What Congress should do is rein in the government. They should raise interest rates and force the government to cut spending.
Peter,
but you agree with me that the Fed thinks that it's a counterbalance. The Fed thinks that 1.1% GDP is why they have to keep rates low. You agree with that, don't you?
Oh, yeah. Well, most likely the Fed actually believes all the Keynesian nonsense these guys learned in college. So, yes, they probably think that what they have to do is help the economy, but they're like, you know, medieval witch doctors trying to leech you back to health. What they're doing is undermining the economy.
Peter, last question before I let you go. A worst day for gold in 18 months. Were you a buyer today, adding to your position?
Well, I mean, I'm already long gold, but I would encourage anybody who doesn't own it to buy some, or if you already have some, you could buy more. I don't know that I've bought any. I haven't bought any myself today, but you never know. I might. But I own a lot of gold. I own a lot of gold stocks. I've been buying for years. And I think that the big trade is still coming because people still have to come to terms with what's actually going on. Right now, you have people jockeying around for positions. You have short-term traders. But the big move in gold is going to be a huge move up. And anybody who can understand that is going to take advantage of any kind of weakness in the market to add to their positions or to accumulate. If they don't have a position, you know, don't wait much longer.
Okay. Peter Schiff, CEO of Euro Pacific Capital. Always great to have you on the show. Peter, we'll talk to you soon.